Okay, so quite simply put, do not leave money on the table. If you have the potential to get a tax refund in the UK or save on future UK taxes and you're not going for it, you're not just forfeiting the opportunity to have the cash back, or you're not just letting go the money, but you are robbing that money of the potential of what it could have possibly done for you. It could be something as simple as the memory you would have built with your family together, whether on a holiday trip or maybe a photo shoot session, or maybe something you could have done for someone special. Or if you're someone who gives a lot to charity or churches, you're forfeiting what that money could have potentially done in those things that you really care about. So my question is, why exactly are you not looking into that? Hello, you. Good morning, good afternoon, or good evening, wherever you're watching this video from. Today is the day where we get to check your eligibility for a UK tax refund or set of structures to save you taxes in the future. I've built my business over a couple of years, and the primary thing that has grown my business so far is nobody is exempt from me checking if they are eligible. It's better for me to check if they're eligible or than for me to say you're not eligible and take you out of the process. So nobody is kept out of the process, which is why I put together these eligibility checks that I run through all my clients. So today we're going to take a little deep dive into you. So before we start digging into eligibility, let's put our money where our mouth is. I have one question for you at this very moment. What exactly do you really want for yourself? What exactly are you investing time on thinking or trying to build? Is it maybe you're planning to propose to your girlfriend, or maybe you want to do something special for your mom, or maybe you just want to change your wardrobe or your bed sheets or your curtains, or maybe you want to do something as serious as investing into your career, something. But what exactly are you passionate about at the moment? What is it you desire to do? That's my question for you. Now the question for me is, how exactly can I help you achieve what you actually really want? First things first, when it comes to people who want to marry, I'm not a marriage counselor, okay? If you decided that you probably are getting married this year, you want to propose to your girlfriend, I can't tell you who to marry, okay? The drama out there is quite a lot, so I can't tell you who to marry. Speak to another specialist. If you are maybe looking to have a surgery, I can't tell you what surgeon to do, okay? All these words of orthopologist or anthropologist or sociologist, really not my thing, okay? If you are maybe looking for a new school for your daughter, or you want to transfer your daughter to another school, it's not my forte. I probably will not be the best person to consult on what school, what district, what area to go to, but the one thing I can definitely do is help you fund any one of these projects. Maybe you want to go on a holiday. I'm not the best person to tell you where your feet can feel the most sand or where the water might not be as harsh on your skin, but the one thing I can do is pay for that flight, or pay for that extra trip that you can have in a foreign country, or maybe that luxury car or something. But whatever it is, my question to you is, what is it? And my question to me is, how can I help you get that? So let's get straight into the eligibility. Let's get straight into it. Okay, so quick disclaimer, this video might be a little bit long, but stay with me to the end, because if it was a straightforward to check your eligibility and know that you're eligible for a tax refund or tax saving in the UK, then I'm pretty sure a lot of people would have been on that bandwagon. But the whole point of what I do and the focal point of my business is I have to put people through these eligibility structures, because a lot of them actually are eligible, but they do not know that they are eligible because everything around them just seems like a normal thing. But when I look at it from the lens of an accountant, I can definitely tell you, you can get X or you can get Y, or you can definitely not get ZH from anybody, okay? Let's get into it. Okay, so eligibility criteria 1, taxpayer and taxpayer pots. What that means is simple. You can only get a tax refund in the UK if you have actually paid taxes in the UK in different tax pots. Now, you pay corporation tax, you can pay personal income tax, you can pay value added tax, which is VAT. There's different taxes in the UK. You can only get a refund if you have paid taxes in the UK. And the second part, which is taxpayer pots, is you can only get a refund out of the same pot that you paid into. So for example, you can't request a tax refund for a company under the name of a company from your personal income taxes. So you can't say take losses that were made for a company and set it off against your personal income tax and say you want to take those, claim a tax refund from your personal income tax pot into your company accounts. It doesn't work that way. So if you pay taxes as personal income tax, you get it out from personal income tax under your personal name. If you pay taxes as a company on the company income tax, you get it out of the same company income tax structure into the company, not into your personal name, not unless there's partnerships, but that's a whole different conversation altogether. Now, before we dive into eligibility criteria 2, just a very quick disclaimer. I'm going to be doing this a little bit inside the video. This is not a tax avoidance scheme, this is not a tax evasion scheme, and this is not creative accounting either. It is simply the law. I did a video a couple of maybe days or weeks ago where I explained the different UK laws that could potentially give you a tax refund in the UK. Now, that video is not comprehensive to tell you all the laws that can potentially give you a tax refund, but those are just examples to show you that these things that we do, or I am doing in my business as an educator in tax accounting and financial accounting, is actually part of the law. It's not created here. It's not you trying to skirt the law, bend it, groom it or shape it into what you want. Not necessarily. It is just how you can look at it from the lens of an accountant. Now, in my very long and lovely career as an accountant in the UK, the only way you can get tax relief or reduce your tax liabilities or get tax refunds in the UK is by something I call tax efficiency structures. So that's eligibility criteria 2. Do you have a tax efficiency structure? Now stay with me there. Don't think, what is going on here? Don't think about that, okay? Stay with me. The whole point of this video is so that we can be able to explain to you how to figure out if there is any of such efficiency structures in your life, because what I've come to find out with most of my clients is a lot of them have, but they don't think that is what it is. They don't think that these are structures that they could use or put together and get tax relief for themselves. They just think it's just them doing whatever it is that they have to do. But that's the difference between doing things yourself and actually doing it through an accountant. So this eligibility, I'm going to break it down a little bit more, but before that, let's do a little bit of another disclaimer. I'm not a tax advisor and I'm not a financial advisor. Every information I'm giving you on here is majorly educative. If you want to talk to me about your personal situation, you can book a consultation on any of my social media pages. And by the way, did I introduce myself? Lisette Nahizena, that's the name. I'm your high street accountant you never thought you needed, but now you gotta research. All right, let's move on. Let's explain how you can definitely look into your own life and find those tax efficiency structures that can get you a tax refund or a tax saving. Okay, now before you rule yourself out completely and think, well, I don't pay any taxes in the UK, I probably cannot get any tax refund, don't do that, okay? Because there is something I call collaborative tax efficient structures, and you might just be someone that benefits from something like that. So stay on the video and watch until the end, and you would actually find out that every single one of you can potentially have a tax efficient structure that can get you some money, okay, from tax pots in the UK. All right, moving on. The whole point of tax efficient structures is to build your income and expenditure of your business, whether it's your business, your personal life, or your side hustle business, whatever it is, to build your income and expenditure dashboard in a way that would favor you when it comes to taxes. Okay, I'll give you a simple example. You could take a trip to Dubai, and that trip could cost you about $3,000. Now, if the way that trip is structured and the way the trip is taken would determine if it favors you in the face of the tax man or if it disfavors you. Now, you could spend the money from your business card, but when it comes to the tax man, they are looking at how much business did you do on that particular trip, or how is the trip framed? Did you know you could actually book a business trip and go on the trip and not have any business? Things happen. Sometimes you could book a business trip and then the business that you're going for does not happen. So I teach how to efficiently structure your income and expenditure in a way that when it comes to the tax man, it benefits you rather than stands against you. Because not everything you spend on as a business owner, or someone who does a side hustle, or someone who wants to request for a tax refund is actually tax deductible. Not every expense. So that's the whole point of you being here. Okay, so remember, we're coming from eligibility criteria 1, where we've identified the fact that tax refunds come from taxpayers, okay, those who have actually paid taxes. Now you can collaborate, but that will probably come at the end of the video. So if you're not a UK taxpayer, stay to the end of the video and you potentially would know or might know how you come in with these structures. But we've now moved to the second eligibility criteria, which is tax efficient structures. Now what this aims to do is quite simple. What this aims to do is look at the diversity of your livelihood and everything that you are doing, everything that you're building, or everything that you are, and identify areas of your life that you potentially would have invested into and not made any money whatsoever, or made losses because you've spent money on them and not made any money out of it. And I'm not talking about actually spending money that's directly related to it. You could be spending time into it. That time you're spending can actually be quantified, and we're identifying areas in your life that would have these kind of expenditure that's accumulated against them in those areas without a correlating income. Then we want to take those expenditure according to UK guidelines and laws and put it against another set of income that you have received in the UK and paid taxes on, so that this expenditure put against this income reduces the amount of money you are actually supposed to pay taxes on. If you've already paid taxes on that income in the past, what HMRC then does for you is to bring the two figures together, recalculate your taxes, and the difference of what you overpaid becomes a tax refund for you. So basically what we're looking for in this eligibility criteria 2 is we're going to identify different areas where you can fetch or identify expenditure, an accumulation of expenditure, whether directly, indirectly, whether paid or unpaid, that you can offset against other UK income and get yourself a tax relief based on UK guidance and UK laws. Okay, so I'm going to go through a couple of steps for you, showing you areas that you can look into to identify these parts of expenditure. All right, so let's start. The first one is your personal lifestyle. I call this the incognito check. Okay, I wrote something down. Let me read it. Now the question you want to ask yourself is, what are you already doing now that is either a business idea you're potentially grooming, or could be a business you are just rendering for free, or something you could pay another person to do for you, but that you are actually doing for free at the moment. So you're looking into your personal life and you're asking yourself, okay, example of things like this are especially those who serve in church, like personal assistants, instrumentalists, tech guys, publicity department members, or someone who does a lot of consultation for family. Now if you're doing a lot of consultation, you're a go-to person, everyone's always calling you for career advice, you are a consultant, or peradventure people identify with you in your field. If you were going to ask another person for the same information that you're giving out for free, they potentially would have told you to book a consultation session with them. So you want to look at the deep core of your life and identify what particular areas either am I grooming a business in, or that could potentially be a business that I'm not considering as a business, but if some other person was supposed to render that service to me, I would have paid them for that service. That's what you want to look at, and that's the one thing I do. That's the one thing that takes a lot of time with me and my clients. When I sit down, I have an onboarding call with them, 30 to 40 minutes. That's what I'm trying to get at. I want to look into their lives. So I ask them so many questions. Give me your routine. What are the go-to things that people come to you for? What are you naturally known for? What are the things that you volunteer? What's the kind of information you volunteer? What's your job like? If you were going to teach what you already do at your work, what would it be like? Do you teach anybody about it? Do you try to bring people into your field? Things like this will identify where they're accumulating time and effort, and potentially if you can find where people are accumulating time and effort, you definitely can find where they're accumulating expenditure, which seems incognito, which is why I termed it check your personal lifestyle, and it possibly would be an incognito kind of a check. I hope that makes sense. Let's move on. Okay, now think about it this way. If any of these areas was going to supposedly wake up one day and make a truckload of money, guess what? HMRC is going to come to collect, because their expectation is you built the business anyway. They have a loss relief scheme if you took 3 years to be able to make profit in the business and you didn't take advantage of the loss relief scheme. Oh well, that's your fault. But the day you start making actual profits in the business, they're going to come to you and issue a paycheck for taxes to be paid on that business. So rather than wait until that day comes, why don't you start now? That's always my question. You know, the day a business makes its first dollar is not the day that business started getting formed. There has been so many things happening in the background. There's been conversations, there's been publicity, there has been volunteering services, or services done at £0 rather than volunteering services. There has been social proof. There's so many things that have happened. There's been hours of invested time trying to acquire the knowledge or refine the knowledge or refine the product. There's been an investment somewhere. If you can identify any one of such areas that could potentially call for a paycheck to pay taxes on, if you made money from, then that's where you want to look at. Okay, you're not making money from it now, but you're spending time on it. You're spending 3, 4, 5 hours at home working on it. Your wife is spending a lot of time administrating for you, registering emails, trying to register you on different platforms that could potentially help you. That's administration. Peradventure, you are volunteering these services somewhere. What that gives you is publicity. So all of this expenditure is accumulating. That's how you use that to get yourself a tax refund. So moving forward, once you have checked your personal lifestyle, which is what I called the incognito check, then you want to check your broader family. Okay, what that means is quite simple. Look into the wider family space. Is there anybody that's doing something for you where you are either just compensating them or saying thank you, or peradventure, if they were supposed to charge you for those same services, they would have charged you quite an interesting fee? Or is there someone who is doing a business around you who is a UK taxpayer? Okay, so is there someone in your wider family sphere that's investing into something that you would have probably identified with before, that is not making any profits from it, that you can collaborate with? So you want to look into the broader family sphere in two ways. Someone you can collaborate with who is doing the business and you are the taxpayer, or some other person that is rendering services to you for free, but if they were supposed to charge for it, they would have charged you a certain amount of money. Now what that does for you is simple. That identifies for you another expenditure pot. Now remember, for sole trader businesses or unregistered businesses, when you're filing for a tax refund, you don't have to do one particular arm. So if you are a personal assistant or virtual assistant, and potentially you do administration, you're rendering administrative services for your former school club, for example, or maybe you are into consultation. Now these are different identifiable businesses, so you don't necessarily need to stick to one particular activity, unless if that's the one that you want to stick to and it's enough to get you tax relief, the tax relief you're looking at, then that's fine. You can stop with one. But if you have multiple, you should actually look at multiple. I'll give you a short story. There was a time I was approached with a client. This is about 2-3 years ago now, and he came to me with a £10,000, about £10,000 to £12,000 tax bill, and he wanted to find all he wanted me to do was just to check his filings to see if his accountant missed anything, why his tax bills are so high. And so when I looked at it, I decided, okay, you know what, I need to have a conversation with you, because this looks quite legit and everything looks right, but I need to talk to you because I understand tax efficiency structures. So by the time I finished talking to him, I identified at least 3 or 4 tax expenditure holes that were ignored by his accountant, and the accountant just focused on the one that was making money, which is why his taxes were so high. And so by the time we were able to put that together, put all his different entrepreneurial businesses together onto his tax return against different years based on the UK tax law still, we were able to not just completely reduce that tax liability from 10 grand, but they had to give him a tax refund of about 12 grand, no, 16 grand, majorly because he had been paying too many taxes based on what his accountant was filing for many years. Okay, and the beautiful thing about this is you have the opportunity to take back losses to previous tax years or carry it to future tax years as many times as you possibly can, depending on the law that you are using. So there is quite an avalanche of opportunity here. Stay with me. Okay, so another way you can look at it is after looking into yourself, the incognito check, then you look into the family, the brother family check. You're looking at people you can associate with or other people that you are spending money on or you potentially would have spent money on. Then what you then want to look at is who you can adopt. Okay, what that simply means is this: there's a lot of people who are doing TikTok shop, YouTube videos, and I'm really interested or invested in those who are involved in social media products, because some of these products or some of these social media product or services sales take a long period of time before they can actually even break even. And so a lot of them spend time, money, effort on different things: publicity, arranging the products, research, administration, registering for this, learning about this. They do a lot of expenditure, but most of them are not necessarily either in the UK or pay taxes in the UK. And so adoption is looking for someone, whether it's someone you're related to, someone you just want to help, or somebody who is in this kind of a pot, to collaborate with them. Adopt whatever it is that they're doing. You become partners. There's something called sole trader as a partner in the UK. Now when that happens, if that business was supposed to make a profit of maybe 10 grand, HMRC is going to expect you to pay taxes on your share of the profit. So if it was 50-50 and the profit of 5 grand comes to you, you're going to pay taxes on it. So the question is, if that same business was to make a loss of 10 grand, HMRC is expecting you to tell them you have a percentage of the losses made of 5 grand to give you a tax relief, so that the day you make profits, you're going to pay taxes. Okay, so you can actually adopt from outside your sphere, which is why I said in the beginning, don't rule yourself out just because you don't pay taxes in the UK. Everybody can actually have a part to play. So if you are someone who is doing that business and you want to look for another person that is a UK taxpayer to partner with and collaborate with, you can reduce their tax liability, and once he gets the tax refund back, then he can invest into your business, and you have a percentage structured in that way. Okay, I hope that makes sense. Okay, the next way to look at this is something I call past to present or present to past, or present into the future. Now you could have in the past done some sort of a side hustle business, or done a couple of businesses that started and stopped, or started and failed, and maybe you were not paying taxes at that time. What you can do is, if you actually have the records of that, which is something I can help you with, you can actually move those losses into future tax years against income and get a tax refund that way. Or if it is something you're doing now but you're no longer paying taxes in the UK from an income tax perspective, maybe you're paying taxes as a business or something else, you can take it back into previous tax years. Okay, so the possibilities are endless. Now if you're really bored with all of this process and you're thinking it's too much, I really can't handle it, then instead of going for a DIY, which I think this is what that's what this will probably be, then you want to contact myself or my firm for our services, and we can look into it for you. And the beautiful part is, we don't charge you a fee until you actually get a tax refund check. So if you're bored of this now, you can go on any of my socials. Remember, it's Lisette Nahizena, and you can contact us, send us a DM, contact us, and we will definitely set up an onboarding call for you and do all the diving to get these structures for you. So that's that. Let's move on to the next. Okay, so now once you have been able to identify the different expenditure or business pots that you can, where you can draw expenditure from to set it up against income in another part of your life and receive that tax refund, refund, the next eligibility check criteria is how we are going to prove the expenditure actually happened. Okay, so what that simply means is you don't want to just wake up and tell me I spent 5 grand on a business in 2020. Okay, how can we prove you spent the 5 grand? Now, before you completely scrub out the video and be like, yeah, I knew it, this is too good to be true, not necessarily. There's something called cash accounting and traditional accounting. Cash accounting says if the cash has been exchanged with a person or with a company, then the transaction has happened. So if HMRC is trying to verify a transaction you said was a cash transaction, then they're going to be looking at maybe your bank statements or receipts, cash payment receipts, to say that that transaction has happened. But there's something called traditional accounting. What traditional accounting allows you to do is quite simple. It allows you to report invoices, conversations, emails as proof of a transaction or proof that a transaction happened. So even if you didn't have access to the same address, the same bank statements, but you maybe have communication with the person, or you can ask the person, okay, we had this conversation, I've lost my phone, can you redraft an invoice? It will suffice in traditional accounting when you file for a tax return or tax refund using something called traditional accounting, then that will suffice. Okay, so that's one way. So remember I said once you've identified the pot, then the next thing to do is how can we legally prove the expenditure that you've identified. Now, one very simple way you can most definitely qualify the expenditure from most small businesses or side hustles is by something I call the outsourcing formula. Now, for every side hustle business or small business, there's very key things that would always be necessary for the business to run. Stay with me. One is publicity, another one is administration, another one is accommodation, and another one is transportation. Now, these 4 items, amongst many others, are key to any side hustle business or small business that is starting. So rather than try to start accumulating receipts and invoices and looking for conversations, all you need to do, or all you would possibly need, is a legal backing document that contracts or outsources these 4 expenditure heads to either a third party or your spouse or your siblings or yourself, between your business and yourself. A simple example is this. HMRC says if you use your house for work, you need to calculate how many hours you spend at home and use that to measure the calculation or the figure that you're going to submit to HMRC as the portion of your rent that is allocated to your business. But if you had a signed contract, a legal contract between yourself and the business that states that you're going to pay your business £300 a month every single month for using your home space for the business. Now, this contract will also have to state that there's no restrictions as to the how many hours the business wants to use the space for. If they use it for more time, the amount of money does not change. If they use it for less time, the amount of money does not change. And there's just specific wordings you need to use in this kind of a document to make it legal and legally binding and make it HMRC approvable. Okay, so if you were to have this kind of documents, and by the way, I've done this kind of document, or I have a template for this kind of document. If you contact us as well, we can get one for you. It's not really free. You have to pay something quite small to get the document. We have that kind of a document that I worked with a lawyer to put together. Now, those kind of agreements saves you the time and the stress of trying to calculate, allocate, look for receipts, go into your bank statements, because, as simply put, if you rented a car from a car dealer and you rented the car on a daily rate of £50 per day, now you don't return to the car dealer and say, though I rented this car for £50 a day, I only used it for 2 hours on Tuesday, I only used it for 30 minutes on Wednesday, on Friday I really used the car for 12 to 24 hours. So can you balance the amounts? Not necessarily, because there's a legal contract in place setting boundaries and parameters. So that's exactly what I'm trying to say you can actually do. So you can fetch the invoices, the conversations, the receipts and everything, or you can have this legally binding documents and then you're set. But if you don't want to go through all this trouble, again, contact myself or my team and we can look into this for you. Let's move forward. Okay, so if you've gotten to this point of the video, then you probably are interested in getting a tax relief for your future taxes or a tax refund from your past taxes. Well done and welcome on board. You can either contact us to get your DIY on board. We can do it with you. There's also a do it yourself, there's a do it with you, and then there is a we do it for you kind of a package, and we can get the ball rolling on this. But if you are at this stage, then your structure should look something like this. So there is someone who is paying taxes in the UK, and then there is a side hustle business that is linked to either yourself or another person. There is an outsourced side hustle business or a business, which means you have potentially adopted another person's business, or there's a collaborative business, and then all of this put together, you would then be able to fetch from it, how you're going to identify and prove your expenditure, and then you should be ready to file your HMRC tax return and get yourself tax relief or a tax refund. Okay, so we've run through all the eligibility criteria. See, it's quite straightforward. First things first, you need to find a taxpayer if you are the taxpayer or another person is the taxpayer. And secondly, we need to identify the pot of expenditure. It could either be a side hustle from yourself, it could be an outsourced side hustle where you outsource a business to another person to deal with and you just adopt the profits or the losses. It could be a collaborative side hustle or collaborative business where you partner with somebody and adopt the profits or the losses from the business, or it could be potentially something from your past, from your present that you want to move retrospectively. If it's any one of these, then fantastic. The last thing is we need to find a way to prove the expenditure, whether we are having invoices, conversations, or we are preparing legal documents to say this and that happened and filing through traditional accounting. Then you, my dear, are ready to file your tax return for tax refunds in the UK. Congratulations. Now, just a quick disclaimer. Now, again, I'm not a tax advisor and I'm not a financial advisor. You can contact a licensed tax or finance advisor if you need one. This is for educational purposes, and if you want to adopt any of our services will be on your screen. We do file taxes, tax returns for companies, sole traders. We do not yet do VAT, but in future we potentially would. And one of the things I really specialize in is tax efficient structures, getting you tax refunds or tax reliefs in your business or in your personal life. And also we want to adopt other accountants into our team. So if you're an accountant, whether in India, in any English speaking country, and if you're looking for an opportunity where you can file taxes for businesses or corporations or individuals in the UK and you don't know where to start, this is the place to start. We are working on having referral programs where if you referred someone to us, we can give you a percentage, or we can give you a referral bonus. And also, if you are part of our accounting pool, you get to benefit from the clients that contact us directly. We want to spread the love, okay? That's just what it is. Now, this video has gone on too long. My name again is Lisette Naizena. It's been absolutely beautiful, and until our next video where I get to tell you step by step how to file your tax return or get your tax refund, stay blessed, stay tuned to Show Me the Money podcast. And we're going to be coming up with Call the Accountant. I mean, there's a lot lined up for you, so follow us on our different socials. Lisette Naizena on Instagram, TikTok, and on LinkedIn and on Facebook as well, and on YouTube. Yes, Lisette Naizena. Until the next time I meet with you, stay blessed. I love you all, and I hope to hear from some of you soon.